Thanks for coming back for another video from NetPicks. We really appreciate the support here on our channel. If you like this video, make sure you hit like. If you have any questions or comments, feel free to put them below. And of course, subscribe to our channel. So in this video, we're going to talk about the double inside bar pattern trading strategy. It's a mouthful. It's a little bit different than just a normal one candle inside bar. Okay, so what we're looking at with the double one is we're looking to take advantage of a slightly longer term consolidation in the market. You know, there's a saying that goes, the bigger the brick, the bigger the break. And that describes what we expect for a double inside bar break. So if you agree with that saying, then there's a chance that a number of inside bars should bring a bigger break. And that could be true. But today we're just going to focus on the two inside bars. And remember, depending on your time frame you're trading, they could have more meaning when they break. So for example, this is a daily chart, for example. Okay, it's a 3-bar price pattern. We would actually have 2 full trading sessions forming inside bars. The red candle, we'll call it the mother bar. The next candle can't break the higher low of the mother bar, so we have an inside candle. The last candle can't break the higher low of the first inside bar, right? So that's an inside candle. So that would have been 2 full trading sessions. A 5-minute chart would have had 10 minutes. Knowing this and understanding that, that's the reason to use a higher time frame, because it could be a better edge when you use that as opposed to a smaller one. You might get a bigger run in price. So let's cover the basics of inside bars just so we're talking the same language. So essentially, when these bars form, what we're looking at is a decrease in the volatility in the instrument that you're trading. Okay, there's no clear winner in the buyer-seller battle. But to have that, right, to have no clear winner, we need to actually have a prior imbalance of buyers and sellers. This is why we much prefer inside bars that take place at either potential turning points or in a strongly trending market. When we look at ranging price action, we're missing the main ingredient in how these setups work, which is momentum. We need momentum. We need to have a strong imbalance of buyers or sellers to break the short-term support or resistance levels of the inside candles. Okay, these levels are just the high and low of each candlestick. Now let me say that this trading strategy would be traded differently than a range trading strategy. In my world, in trading a range strategy, I'm not looking in between the high and low. I'm looking to ideally position before the breakout of the consolidation pattern inside of a basing formation. Okay, these inside bars, these are just simply pauses in the market. So compare that first graphic with this one. Okay, now this is not to say that the original one cannot resolve into looking like this. This is why we put the odds in our favor by looking for the double inside bar during a strong trending market or trading the price pattern at potential reversal points. You know, think previous swing levels. Now, here's a little tip for you. The formation of the double inside bar could be part of your trading plan that says once the double inside bar setup fails to trigger, okay, the trader will either move on to another instrument or turn to use a range trading strategy to take advantage of any pending price movement. Okay, so don't think that you have to trade ranges. There are plenty of other opportunities out there. So let's look at the details of the strategy. Okay, it's not a complicated setup at all. The first strategy step, what do we need? We have to find a market that's trending or find a market at a potential turning point. So this example, price was actually in a consolidation and actually broke out to the downside, right? Breakout traders. And then it ran into prior support. Now keep in mind that when a price breaks out of a range, it will usually go back to test the breakout level. So the mother bar actually hits support, and then we get our 2 inside bar setup. Well, how do we enter the trade? Well, unlike most instructions where you take a break of the mother bar for an entry, we're not going to do that. Instead, we're going to buy the break of the high of the second inside bar. So we're going to have 2 price points that we're going to pay attention to when we're considering our profits or trade management. The first point is the high, in this case of a long, of the first inside bar. You could scale out profits, you could take all your profits, or you could use that zone as just an adjustment for your stop loss. Now, in this double bar example, you would have turned out break even on the trade. Okay, there wasn't a whole lot of profit to be had at this first level. Your stop loss, entirely up to you. You can use the low of the second inside bar when you enter the trade. You can use the low of the breakout candle. You can use the low of the inside candle, but exit if the breakout candle begins to fail. Now, I intentionally picked a non-stellar example. Okay, I could cherry pick the best setups very easily. Now, in this example, we would fully expect some type of rejection when price returns to a breakout level. Okay, it's the concepts that are important and not how each of these example trades played out, right? Because these are all hindsight right here. Let's take a look at another example. The market's trending up. You can see that the green candles outsize the red ones. Buyers, who's in control? They are. You can also see market making higher highs and higher lows, which is an uptrend. We have our mother bar form. We have our 2 required inside candlesticks. Price breaks up, hits our initial targets. So do you have to exit when that happens? Remember that each high or low of each candlestick represents, at least in the short term, an area of support or resistance. Our double inside bars are short-term consolidations. And we can expect that when they break, the odds are they will reach the high or low of the mother bar. Each trader is going to have to measure their own appetite for trailing stops, okay? And there's many ways you can do that. One way is just simply use the high or the low of each candlestick, trail your stop up. Does the trend matter? We all hear trading with the trend. So does it give you a chance to make large gains? Yeah, sure it does. But I don't want you to discount this strategy for counter trend moves. So in this example, I just put on a 50 EMA, okay, just so you can see the market strongly trending upwards. You can see how price has really gone far away from the 50 EMA, right? So we can think of an extended market. What you get, price forms a range, right? Rockets to the upside to break out over previous resistance. Now, if you study trading breakouts, ones that start at the bottom of the range to break out will usually fail. What I like to see, and I talked about this earlier, is some basing under resistance for an upside breakout and above support for downside breaks. The fact that there was not enough buying pressure and price could not continue to the upside after the strong momentum push gives us a head up. A reversal trade could be in order. Now, keep your expectations in check, right? Taking profits at the second dotted line, right? That's the potential support level of the mother bar. Yes, it's a weekly chart. $9 per share. It's not bad. Let's take another look at an example. Now, I want you to keep in mind that when you're day trading, the moves to the original profit targets, they're not going to be large. They're just not. So in that case, you may want to go to a higher time frame and see out other highs. In the case of a longs, that could be taken out. Right here, we have a 30-minute chart. You can see that price is basing under a previous high. I like that, especially for a breakout. Right, that's what I look at for breakout types of trades. So to me, the basing is important because it shows that the sellers have not been able to drive price back down. And we're in an uptrend. That's the good news, right? You can see our 3-bar pattern setting up. The entry price is at the break of the 82.64 high. Price easily reaches a small target. Now, since the target was small, this is a 30-minute chart. We go to the daily chart and we can see that the next daily high to take out is $86.33. And you would manage that trade as it makes its way up or exit if you get an obvious reversal. Right? You can even look for a 2-bar inside setup and get out if price breaks to the downside. So in this example, $86.33, that would be a great target for a swing trade. And as of right this second, when I'm making this video, price is at $85.02. All right, so this trade is in some profits. So let's wrap it up here. I think it's a strong price action approach to trading the markets. The bonus is you have a built-in profit and stop loss targets that gives you the opportunity to exit. I think it's flexible. Any time frame is appropriate. The trade-off, as we saw, day trading is going to give you less bang for your effort, but you can always turn these into swing trades if the market is moving. I don't really think that adding another indicator is going to add much effectiveness. And the basic strategy is you're looking for quick price targets. So we're not interested too much in oversold or overbought. We can actually see momentum in the candlestick. Although if you want to use something like a 50 EMA, that does show you extended markets that could help you pick up a counter trend trade. In fact, when you see the double inside, that's a pure sign that momentum's not in the market at that time. So you don't need an indicator to tell you that. But we want to take advantage of it when it does re-enter the market, which is why we take the trade off the second inside candle. Right? You can see a similar concept in the video about triangles. So that's pretty much it. It's pretty simple to trade, right? You're going to have to make your trading plan, of course, and test it out and go over some of the details that we discussed in this video. But I sincerely think it's worth an effort on your part to explore it. Thanks for coming out to another video. Again, make sure you hit like, subscribe, give me a comment. We'll talk to you soon.